Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Australia's insurance sector is under some pressure. Premiums have been rising sharply. Natural disasters are becoming more frequent and severe. And many households and businesses are finding insurance increasingly unaffordable amid a broader cost of living crisis. I wanted to take a bit of a 101 on the industry today. What we can then go on, what can we expect from premiums over the next 12 months or so, and how insurers work. Andrew Hall is the CEO of the Insurance Council of Australia. Andrew, welcome to Fear and Greed.
Pleasure to be here, Sean.
Andrew, a 101 on insurance for those of us who just pay premiums and we claim when necessary. How do insurance companies make money? Because it's not just the premiums, it's investing as well.
That's right. So insurance prices risk. It collects the premiums of the many with the view that it can pay the claims of the few. In between all of that, insurers take the premiums that have been collected and they invest that in funds that can provide a return, but also assets that are very liquid. So if they need to draw down on that money quickly, they can. They also seek their own insurance offshore, which is called reinsurance. And that's for when an event is so large that it uses up all the domestic pool, they're able to claim additional capital from overseas.
Okay, so we'll park reinsurance for the time being. We'll come to that. How many big insurers are there in Australia and how many insurers are there in Australia? And we're talking general insurance here, not life insurance.
Well, there's around about 30 general insurers that operate in the home and contents space, which is one of the largest categories of insurance, alongside motor. Within the market, there are four major insurers, the two largest being IAG and Suncorp, and then QBE and Allianz. Then we have a group of what we call the mid-tier insurers. They range from privately owned international insurers through to the motoring mutuals like RACQ and RAC in WA. And then there's a whole raft of smaller monoline insurers. And then there are underwriters who often will market their product like an insurance product and can be popular in areas where insurance is hard to get.
Okay, so that's the industry. What's the health of the industry like at the moment? And I'm talking about the financial health. We'll come on to what it means for customers. It's been a tough couple of years, it seems, from afar, given the level of natural disasters.
So the insurance industry has an interesting profile. It goes up and down like a roller coaster.
Right.
It is unlike other financial services that often have a very consistent profit, gradual growth year on year. So with insurers, we're very much event driven. And you can see over the last 5 out of 6 years, some of the very large extreme weather events like the bushfires and then the floods had a real hit to the bottom line for insurers. That's happened at the same time that I think risk appetite for investing in insurance had become very tight. So we had a perfect storm emerge there in terms of what we call a hard market. So we have hard and soft markets. What we're seeing now is that we actually have had a much quieter 12 months weather-wise, putting aside Tropical Cyclone Alfred and the floods in North Queensland and Western Queensland. It has been, compared to the previous years, relatively normal, if we can call normal. And what we're seeing is that profits are coming back quickly to the insurance sector, but they're really recovering to levels that they were at 10 years ago. And I think that's the constant challenge for insurers when attracting investors, is how does it demonstrate a pathway to continual growth rather than this constant yo-yoing of profit and loss.
So I remember many years ago when I covered insurance as a journalist, QBE introduced this idea. I think it was 10-year rolling average profit. So the whole idea is because it is so volatile, what you need to look is the trend is your friend. It's that kind of concept. Do insurers still do that today?
Yeah, the 10-year trend is very important to understand the overall health of the industry, but it is also critical to know that within a 12-month period, an insurer can go from being in a very strong position to facing very large payouts if they've got a concentrated risk that has happened all at once. And we do see that from time to time. So I think the insurance sector is very alive to the challenge it has around profit, but equally we're alive to having to explain that not just to investors, but to the community and consumers more broadly.
Is it that it's always playing catch up? So you can't predict a bad weather event, you can't predict a bushfire, but what you're doing is trying to recover the losses, for want of a better term, when it's happened. So it's the following year that the premiums increase. Is that broadly correct?
Yes, it is a catch up, and I think it's a catch up, but it's also a big bet. The
Yeah.
one thing about insurance is that we're constantly taking a bet that your house will still be here next year and be okay. And so these are the challenges that the industry faces. Is it has to be able to get the numbers right for taking that bet, and there can be a lot of parameters that can shift in the 12 months, not just the event alone, but in the last 3 years, for example, the cost of building has gone up
Yeah.
for around about 40%. And normally, when you're calculating the cost of a rebuild of a home, it was about 2 to 3% every year. This sort of double digit increases year on year has really put a different lens to the ability to turn a profit at the end of all that.
Andrew, in a moment, I'll come back and we might turn to the consumer and what you mentioned before, reinsurance. We'll be back in a minute. I'm talking to Andrew Hall, CEO of the Insurance Council of Australia. Just before we get on to consumers and what it means for people going forward, reinsurance. You mentioned that concept. For those that don't understand reinsurance, it's kind of like insuring the insurers on a global scale. Is that right?
That's right. It's where insurers can access more capital than what might be available in Australia to be able to meet the claims if and when they are due. And in Australia, what happened over the last 20 years, particularly post the collapse of HIH 20 odd years ago, was our prudential regulators really encouraged drove Australian insurers to be able to access those global reinsurance pools to make sure that we had the safety net of capital available for when really large disasters strike.
Okay, let's bring it back to the consumer. Now, when we talk about inflation and have done for the past couple of years, insurance premiums always seem to get a run in that. And I think you've explained why that's the case. What's the outlook for the next 6-12 months for things like home and contents, car insurance, that type of thing?
Well, we are seeing a number of indicators moderate, which is very good news in terms of premium increases. I don't think we're going to see premiums reduce necessarily. I think that there's been a structural readjustment in the home and contents and also the motor market in Australia now over the last 3 years that is really going to become the new normal. But what is good is that we are seeing reinsurance costs actually decrease now significantly because they have had fewer payouts in the last 12 months. They've got more capital. In the commercial space, small business and the like, a lot more money has come back into that market. And so we're seeing big international players like Lloyd's and others really getting active again in terms of underwriting. So there are positive signs that we're going to see moderation in insurance premiums, and we're hopeful that that flows through as well to the consumer.
How competitive is that business market?
It is a competitive market, and it's one that it's not as perhaps baked in as a mortgage market, for example. And sometimes people think about banking and insurance in exactly the same terms. An insurance policy is a 12-month policy. You can cancel it at any time. It is becoming increasingly easy to shop around online to get better quotes. And as we're seeing, more and more people are paying close attention to their insurance settings. So they will call up their insurer, they'll reduce or increase their excesses. They can take matters into their own hands. So what we'll see, I believe, is as the market softens, you'll see a lot more marketing activity come back from the insurers. They'll be looking to grow their market share and recover from some of the losses over the last couple of years.
Okay. What's the role of government in insurance in Australia? Does it play, are the regulations particularly difficult for the insurers? Is it a bit like some infrastructure plays where insurers are restricted on what they can do? How's all that play out?
We are a very heavily regulated market in Australia. You need an APRA license to be an insurer. That comes with a lot of hefty regulations and requirements. We have ASIC that monitors how product is developed, sold, and then how claims should be managed. And of course, we've got the Ombudsman in the background. for when there are disputes. But the regulations are a good thing. Australia has a very stable insurance market. We've got a high penetration of insurance compared to other markets. And our insurance products are very comprehensive. You can, claim for a broken lamp under your home policy in Australia, whereas often overseas we see markets where you may have a $10,000 deductible up front and those sorts of things. So we do have a very good insurance market. It's one that we've got to keep working on, though. We can't drown it in regulation. We've got to make sure that it's competitive. We've got to keep one eye on where technology is going, what are the sort of advances that are going to come into play for insurance moving forward, and not stifle that, because that's the sort of competitive pressure that will also be added into the marketplace.
I want to finish on technology and potential for artificial intelligence within the insurance sector. I would have thought, given that it is an industry of probabilities, AI potentially could be a real game changer for insurance, for insurers.
AI presents enormous potential for insurers and consumers, but it also is going to throw up some fundamental challenges for us as an industry. If you think about what insurance does, it pools risk, and it takes a whole heap of risks that are, generally known, but that we're not that granular about it. Often it was called postcode pricing. Moving forward, an insurer is going to know through AI and through data and the like almost more about your home than you do, right down to the sort of nuts and bolts that are holding the roof down. And as that sort of data builds up a profile, insurers will be able to better risk select who they want to provide cover to and they don't want to provide cover to.
Yeah.
So that partnership with government is going to be even more important moving forward, because there is going to be a cohort of people who are living in unsafe homes in areas that shouldn't have never been built in the first place, for whom their premiums will be more, while those that live in safer areas may get cheaper premiums. Now, people will be happy about that if you're in a safe area, but we do have to have a conversation that as we lose the effect of pooling, how does insurance work as effective as it has done in the past moving forward?
Andrew, thank you for talking to Fear and Greed.
My pleasure, Sean.
That was Andrew Hall, CEO of the Insurance Council of Australia. This is the Fear and Greed business interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.